Hey guys, happy Monday. It is April 7th today, 2025. It has been about 2 months since the February video I did covering Aspen Aerogels a couple days before they announced their full year 2024 results, that 10K that you guys should go read. And hopefully you listened to the management earnings call with us back then in February. But a lot of things changed on that day. And we have a new administration in place. And, the stock price of Aspen Aerogel went down based on updated management guidance and the new administration and a little bit of uncertainty. And you guys have been asking me, what do I think about what is going to happen with ASPN over the course of 2025? And, it's a little bit uncertain. But I did want to take a few minutes to share some thoughts with you and maybe start the dialogue and see what you guys are thinking and what you've come up with your own DD. So leave me your comments down below and let me know your thoughts, your DD, your expectations for ASPN throughout the remainder of this year. And let's get right into the couple of things that I want to share with you that I am watching from this company and for this company in the next 12 months. As we take a fresh look here in April at Aspen Aerogels, let's just refresh why we looked at it back in February. This is not a horrible company. They have years of increasing top-line revenue. The company had a $62 million positive operating income last year. The net income for Aspen also flipped from many years of negative net income to a positive $13.3 million in 2024. There has been some dilution, if you have been holding Aspen for a long time. I have not. And one of the reasons we were looking at it back in February was thinking that if they can continue growing that revenue, that probably the worst of the dilution is over. Maybe though now, if things are going to slow down in 2025, we might need to rethink that theory. And just looking at a couple of other operational metrics, gross margins, 41%, operating margins, positive 13%, profit margin, 3%. Looking over on the balance sheet, $220 million of cash. Total assets, $895 million. Total liabilities, $280 million. So the balance sheet is fine. If I look at current assets, $409 million versus current liabilities, $110 million. Again, this is a decent balance sheet that the company has. Shareholders' equity, $614 million, and working capital, $299 million. And the other thing I just want to take a quick peek at is the operating cash flow for last year. That was a positive $45 million after many years of negative operating cash flow. So it was a good situation based on that growing revenue. The question on everybody's mind is that revenue sustainable with the possible changes in the EV market? And that's what we're going to talk about in this video. When we were looking at Aspen Aerogel here in the middle of this chart, it was around February 1st through 9th, a high volatility play based on some very high expectations of a growing EV segment and a second manufacturing facility in Georgia coming online in Statesboro, Georgia. And then we got the earnings call a couple days later, and management updated expectations and let everybody know that they were canceling the Georgia second manufacturing facility because of uncertainty in the EV market under the Trump administration. And that, was going to then therefore deflate revenue and earnings expectations that had been built into that $11 price on ASPN. And as people kind of reset mentally what those lowered revenue and earnings expectations would be, the price has been going down. And then, of course, we have tariffs and everything else, a lot of uncertainty affecting the price of ASPN. As we think about the future of ASPN over the next year or two, and what is the potential value of the company's stock, One thing, that I like to look at is what are the analysts forecasting for this company. And we got some crazy price targets here. The low $13, average 23, high $41. I certainly am not expecting $41 in the next 12 months. $13 might be reasonable, but I'm still going to say that right now in April, it's still a little bit speculative because I don't have good insight into how the EV sector is going to, act in 2025. And I don't have good insight into how the potential impact of tariffs, both from goods being imported that Aspen needs for manufacturing and their exported products to their customers, how is that going to impact their sales and earnings? We're going to need to get a couple quarters behind us to see that. So because I don't know those things for sure, I'm going to say it is speculative. After the earnings call, we got updates from many of the analysts that cover the company's stock. And with the recent analyst forecast in February, they have prices $13, $15, $16, $18, $22 for the 12-month target. I think, all of those are reasonable. If I was going to be very risk averse, I would say maybe pick the lowest one, $13. So $13 is kind of what I'd say is a reasonable upside expectation for ASPN if the EV sector continues on a 10 or 15% growth path. And the other interesting thing to think about is, Tesla is not a customer of this company. General Motors is, Toyota is, potentially Volvo and Audi and some other companies like them. And if Tesla is getting beat up, are some of those sales going to go to other vehicle manufacturers, EV suppliers? And could that help Aspen Aerogels? Again, that's a decision you need to think about and decide for yourself. That is part of the speculation that we all need to do as we think about what to do with any potential or current investment in ASPN. PyroThin is the company's main product. It serves the EV industry, a very thin foam insulation to mitigate any thermal runaway in EV batteries. And as I mentioned, some of their biggest customers are General Motors, Toyota, Stellantis, Audi, and Volvo are some other customers that they are working with. We can see here in this example how the battery on the right is having a thermal runaway event. They've got the insulation material in the middle between the two cells, and the cell on the left is being protected. The company's other two main products serve the energy industry, including Pyrogel, which is a aerogel blanket. And the second main product is Cryogel, which is a cryogenic insulation that offers protection against cold. And that would be used mainly in the LNG, liquid natural gas industry. The reason I mention those is as I was going through the 10K, I was kind of looking at what is management communicating as far as their outlook for 2025 and any risks that they are highlighting in the 10K that I think are important for us to think about. And one of them, when we think about the EV sector, is that, the Trump administration is already kind of putting the brakes on the EV sector a little bit. But like I said, if General Motors is not putting the brakes on their EV production and maybe even getting a boost because perhaps Tesla is falling out of favor with consumers, we don't need to go into that, but you guys know what I'm talking about. Could that be a boon to Aspen Aerogels? I don't know, but General Motors accounted for 64% of this company's revenue in 2024. So that is something that is, I think, very important for us to think about. How is General Motors going to fare in 2025 in the EV segment? And that's something that we should be paying attention to as we're thinking about what could happen with Aspen Aerogels. In 2022, the company announced the construction of a new second manufacturing facility in Register or Statesboro, Georgia, depends on which city you want to call it. And they have been slowly working on this plant, but we heard in the earnings call in February that they were canceling this project based on uncertainty from the current administration. So we can forget about this plant. And the other thing that I'm just thinking we might need to think about is there could be some impairments related to letting this facility go. The construction cost, everything that they had, $334 million of capitalized construction cost baked into their financials. They're going to need to unwind some of that. It's not clear to me how much they spent, but it's, there's going to be some impairment, and there's going to be some money they need to pay back from incentives that they got from the county and the state as well. I don't know that it'll be a material amount, but it will be some impairment. And all we heard in the company conference call and in the 10K is they are assessing what that impact is going to be. So something to be aware of that we will be hearing more about in the next quarter or two. Because the company opted not to complete this second manufacturing facility in Georgia to help manage their finances, not overcommit on expenses of having a second facility, they are instead optimizing their current facility and relying on subcontractors in China and in Mexico. And again, that plays into some of those import tariff concerns that I have. Moving over to the energy side, because then we start asking ourselves, well, maybe under this administration, if they are energy focused, not solar and wind farm, maybe the company can do really well in the energy sector over the next 4 years. Maybe, but I also want to look at what the company is telling us in their 10K about that sector. The good thing that they tell us is that they have a strong installed base with industry-leading energy customers that they've been working with since 2008. Cumulative more than 500 million square feet of insulation, representing more than 1.5 billion in cumulative sales since 2008. But how about moving forward over the next year or the next 4 years? What they go on to say is that demand for insulation in the energy market is composed of demand associated with new build construction of facilities, capital expansions and related capital projects, as well as routine maintenance programs. But more importantly, capital expansions and related capital projects are driven primarily by economic growth and projected growth in energy demand. Further down in the risk section, they tell us that a sustained downturn in the energy industry due to lower oil and gas prices or reduced energy demand could decrease demand for some or all of our products and services, which could have a material adverse effect on our business. Now, clearly, I cannot predict the future, but if we think about the last 3 months since Trump has been in office and all of the economic uncertainty, fears over inflation, we are actually seeing that crude oil prices have been coming down from $80 down to $61 a barrel. And the company's pointing out that lowered oil prices could impact their business. And so that is something we need to think about. How is the impact of United States economic policy and global economics, global economies going to affect the price of oil and LNG over the next 4 years? Because it could impact Aspen's core business. As I think about all of this, I'm not negative on the EV industry. I think that it will grow into the future. And yes, Aspen Aerogels does have competitors in this segment, and that's something they're going to need to continue to fight out in the marketplace. But if we look at the chart, we're in a demand zone for Aspen Aerogels right now, a support area in this $4 to $5 level. And we have analysts predicting over the next year or so that it could reach back up to $13. Some of them have even higher price targets than that. Will that happen? Tough for me to say. What's going to happen with the EV industry or the energy sector? That is why I'm going to continue to call this for 2025 until we get a couple of quarters of results and updated management guidance. I'm going to call this a speculative play. There's risk in this play. It's a solidly performing company with a good balance sheet, but it's not risk-free. So you need to make up your own mind what your risk tolerance is. And it's going to be a play of patience, because we need to let all of this economic uncertainty and administrative uncertainty work its way out. And I don't know how that's all going to come out in the wash. Things to think about: EV demand, tariffs, China and Mexico production, 43% of revenue coming from outside the US. What are retaliatory tariffs going to look like as Aspen Aerogels sends their products over to foreign countries? Any possible impairment charges that might happen related to canceling that second facility in Georgia? And then how is the energy industry slowdown potentially going to affect Aspen Aerogels? There's a lot to be positive about, but there are some risks to consider as well. I want to hear your guys' thoughts. Let me know your comments and questions down below. I am Tony DeNaro. Thank you for watching, and I will see you on the next video.